Welcome back to another edition of This Week in 3 Minutes. I've called this one Sufficient Turbulence. If you haven't been watching the markets this week, probably best just to leave sleeping dogs lie. It was ugly. We now have sufficient turbulence in the markets to suggest that we have broken trend. In fact, actually, the long-term 10-year bull market in equities the trend has been broken. All of them, the NASDAQ, the Dow, the S&P, you look at all of them, they're all below their 200-day moving average, which suggests we're in a new paradigm. Now, that doesn't mean it couldn't go up from here, but what it suggests is that that 10-year trend is over. And, of course, the logical conclusion is, having had a market go up for 10 years, we're probably going to go down for some time. There's some real concern out there right now. Let's see what we got here. Oh, right. So let's talk about comments from a couple people I follow. Paul Volcker, I haven't heard this guy talk in ages. If you don't recall who Paul Volcker is, he's the guy who was Fed chair during the early 80s when interest rates went to 20%. And he's saying we're in a hell of a mess in every direction. He gets quite critical of a number of things. I won't get into it. Jim Rogers, a guy I've been following for a long time. Here's a guy who was so concerned about Western markets, he packed up shop. He's an economist and money manager. He moved to Singapore. He said, that's the future's in Asia. I'm out of here, guys. And so his comment this week was, financial crises always begin quietly. Then before you know it, we have a global economic meltdown. And I mean, that perfectly describes the last three big crises that we've had. So what's going to be the next big crisis is anyone's guess. But these things always start out this way. They start to build steam and build steam and build steam, and then something breaks. And all holy hell breaks loose, and the newspapers get their headline, and we're all talking about it for 10 years or whatever it takes until the next big crisis happens, which looks like this is where we're heading. So, all doom and gloom aside, you and I, we all know that gold does great in market volatile periods, and it's the best asset to offset equity losses. But what I'm really excited about, and I wasn't joking when I said last week that I haven't been this excited about the gold price in 6 years, we just broke a 5-year technical pattern on gold, which suggests that the next run-up is going to be good and strong and probably last several years. It's called an inverted head and shoulders, and it began in 2013 and it ended late summer this year, suggesting we're due for a nice, big, long, solid push up in the price of gold. And that was reaffirmed by another short-term technical trading pattern where the pennant on the price of gold, which they call it a pennant, they come up with these cute names, it looks like a little flag from a football game or something, but it broke out of that pattern and to the upside. So we're getting long-term and short-term bullish technical trends on gold, which is going to bring in the HFT algos on the computers, and it's going to bring in the big money traders. And, you know, as things get more and more spooky out there, people are going to look for safe haven assets. And given the fact that the gold market is so big and able to actually absorb this capital, I think a lot of it's going to go there. And we're all going to feel very, very good about our decision to have a gold allocation. And people aren't really running for the exits just yet, but it sure seems like they're eyeballing them. And I think that's where we're at right now. People have started eyeballing the exits, just nobody's yelled fire. So on that, have yourself a wonderful weekend, and we'll see you next Friday.